Home buyers, the lowest rate is not always the best rate. Let me say that again. The lowest rate is not always the best rate, and I will explain why. So in this video, we're going to be going over discount points, fees associated with the rate, and how to properly look at a loan estimate. Okay, I'm on vacation, and this is going to be just kind of a shoot from the hip type of video. I'm obviously not in my normal office and setup, but I'm continuing to see this, and it's a very important topic, so I wanted to bring some light to it. When you're buying a home, everybody loves to talk about, hey, what rate are you getting? What rate did you get? That is half the equation. Nobody else asks what fees, what discount points were associated with that rate too, right? That's very, very important. When you're buying a home, you are going to be under contract and you're going to be working with a lender. They are going to provide you a loan estimate up front. This is the initial disclosures that they send you, and it's about a 4-page document, but really the first 2 pages are the nuts and bolts of your loan amount, your interest rate, the fees that are associated with it. And so on the second page, on section A, in origination charges, that is where you will see discount points. Discount points, for those that are not familiar, are fees that you're paying upfront. It's a cost. It's not a discount. It is a cost to you to buy down your interest rate, which obviously lends to a cheaper monthly payment. At the time of this recording, early July 2024, VA loans are what I specialize in. They're what I do with most of. The 30-year fixed, it's been hovering somewhere in the 6.5% par, meaning the average national rate. If you wanted to get a lower rate, if you're like, well, man, I really want to get 6% or 5.8 or 5.75 or something like that, then you're going to have to pay a fee up front, and that is discount points. You're paying to lower your rate. Quick note on discount points. 1 discount point equals 1% of the loan. So on a $400,000 loan, 1 discount point would be $4,000. 2 points, $8,000. You get the math. Monty gets the math. It's boring. Back to this. I see this. I got one yesterday. I was working with a borrower. He was already kind of working with another lender, and he was like,
hey man, I got 5.625.
30-year 5.625.
Can you beat it?
And I was like, well, probably, but does it even make sense? And so when he sent over the estimate, the lender was charging him $22,000 in discount points. $22,000 in discount points to buy that rate down to 5.625. And when we did the math, he was saving about $300 a month in what the par rate was going to be in buying it down. So it becomes a break-even analysis at that point. $22,000 divided by 300 is roughly about 73 months. So over 6 years, it's going to take him to recoup that initial discount point cost. Now, I don't have a crystal ball. I wish I did. But if I was going to bet in the next 12 to 24 months from now, rates are going to be lower than where they're currently at. So in my opinion, discount points only really make sense when you're somewhat confident that in the next 1, 2, 3 years or so, rates are not going to be going down. They're either going to stay the same or go up. The reason why this is important, because if you end up doing a refinance in the future, especially with the VA, right? The VA IRRRL is the most easy, streamlined refinance there is. I'm going to point somewhere on the video and link that VA IRRRL so you can go check it out. It's amazing. But if you do a VA IRRRL, which is a streamlined refinance, and refinance into a lower rate, and it's a year from now, and you paid $20-something thousand up front, you have just burned that money. You are not going to recoup it. It has to make sense to buy down your rate. And lenders get crafty with this. Most of them call it discount points, but technically I've seen it called origination fees or whatever. It all gets rolled up into section A, which is the origination fees. So just be wary. You've got to look at what is the best bang for the buck as far as rate. Always be asking, hey, what's the par rate? What's the rate if I buy it down a little bit? But if you start going 1.5, 2, 3+ discount points right now in this current market, and you plan on owning that home for the next 3+ years, you likely have a refinance in front of you. If you have any questions, please reach out to me about discount points, origination fees, and if it makes sense right now in the current market. Thanks.